What's up, guys? Cameron Foose here with FooseAlerts.com. It is June 20th. What a day in the market. We dropped 353 points. I believe that's the biggest decline, single day decline for 2013 so far. And it was actually a pretty good day. I still made $1,000. Majority was going long, and this is just to show, again, it doesn't matter what the market's doing. There's going to be opportunities that fit the FOOS 4 criteria and that we're able to bank on. So, excuse me, got some food in my throat or something. But today was a great example of that. We used the FOOS 4 basically part 2 strategy. It was actually basically using FOOS 4 and FOOS 4 part 2. My entry on the stock that we made money on, DRRX, was based off of the FOOS 4. This is something that I called out this morning that was a potential buy here because there was news out. They got a new application for an NDA, which basically means they can put their drug back in the market or something or other. And before they had obviously some kind of bad news since the biotech stocks and this thing completely collapsed. So we were setting up in a revival position. It just finally broke out above the 13 EMA this morning. We were talking about this stock pre-market, and I was saying, hey, check out DRRX. This is definitely a potential trade here this morning. It was sitting right about this previous high resistance here pre-market, and basically I bought into a F1 breakout pattern here this morning. I'm going to load up Thinkorswim because the intraday charts here are a little bit better. But it was basically on the daily chart, it was a revival pattern that broke out above these previous highs of about 89 cents. So when we opened up, we actually didn't get any major selling off. A lot of these times when these biotechs gap open, there's usually a gap to grab, but that also happens a lot on biotechs that are actually looking bullish, stocks that are breaking out to the upside. This was coming off of some very, very recent lows. This thing was just up at almost $2 just recently. So this was coming off the lows. If we look at the intraday chart here, let me bring down this Thinkorswim chart. It's a little bit better to view. Basically, right out of the gates, we popped out at the gates right here on DRRX, and we're kind of just trading back and forth. We didn't really have a lot of volume, but that is an F1 breakout that started to form on the 1-minute chart with the high there. Get rid of this trend line. With the high here of about, what's the high? 88.5. So a breakout above that 88.5 zone was an F1 breakout, and that's exactly where I bought in. As soon as this looked like it was about to break out, I got in at 89 cents. And this, didn't have a lot of volume, so it was definitely a bit of a sketchy stock. So I only went in 10,000 shares, but it was an F1. We didn't see any major sellers right out of the gates. We just saw that huge spike right at the open of about 58,000 shares on the buy side. So I definitely saw momentum going for us here. And also looking at this 88 to 89 cent breakout there, that's also the exact spot here on the daily chart where it was breaking out above this previous high. So there was multiple indications. One, that on the daily chart it was breaking out, and two, on the intraday chart that was also right at the F1 breakout. An F1 breakout that I teach over and over again in FOOS 4 Part 2 is basically a stock that gaps open intraday, either a gap or just major momentum in a bullish move right out of the gates, and then forms some kind of a mini flag pattern. And as soon as that resistance of that flag breaks, for this instance it's 88.5, that's an F1 trigger. And then as soon as that 13 EMA breaks down, which is indicated by this blue line, that's a potential sell signal, and that might just be all you get for the day for that trend. It can be different. You can look at it on multiple time frames, 2-minute, 5-minute. Lately, due to things being so volatile, right out of the gates, I like looking at 1-minute charts. Basically, you just get a better view, a much shorter term view, the shorter term of interval you go. Say for instance the 1 minute chart, we do have an F1 minute little mini flag breaking out here that you can actually measure. If we switch to 2 minute, if we look at that, you know, it's a little bit less of a visible thing, but you can still see it. If we move to like a 5 minute, we're probably just going to see 2 candles. So you don't really have a clear buy signal there. You just have one candle that all of a sudden breaks out another candle. You don't really have formation setting up there. So when we look at the 1 minute chart, you know, we can actually see that there was kind of a flag formed up here that actually finally broke out of a resistance point. So that's when I bought in right there at 89.5, and obviously the next profit target there is around $1 per share, because that's going to be the next whole number. And we actually did run up towards $1 per share. I obviously just don't have the patience to do that. I actually sold right around here. I started getting rid of chunks at 96, 95, and 94. So I was averaged out at about 94.5. But the thing is, you know, I was definitely sketchy about the market. The market was collapsing right out of the gates. I had a profit of about $500-600, and I was like, I don't want to try to, you know, bet the farm here and think that this thing's gonna just completely, absolutely ripping. So I played it safe, made a quick $500-600 here on DRRX. Some other guys held it all the way up to $1, which is freaking awesome. You know, if we look at the 13 EMA on this chart, which is on the blue line on the 1 minute chart, it basically rode it, you know, the whole time all the way up until about 102. It had a couple of very quick spikes on low volume, which was why I sold, because it was scary, because this thing dropped from, you know, 96 cents all the way back down to 92.5 cents within 1 minute on very low volume. So that dropped that much on just 11,900 shares. Me being that I had 10,000 shares, it made it a little bit more difficult to me to get out of that position without, you know, spiking the stock down and me giving up all of my profits. So after this little sell-off spike, I got pretty sketched out and started getting rid of chunks right in this area, right here, and locking in this profit. And then we eventually broke out of another flag pattern here at 96, which ripped it up to 94. Let's look at the 2 minute chart here. Gives you a little bit better illustration of the 2 minute 13 EMA working out perfectly by this blue line. Basically ripped the F1 breakout, came back down, retested the 13 EMA, continued to test it, tested it again, and then finally broke it down at about $1 per share, which was definitely a good sign of just an intraday sell signal to lock in some profit. You know, especially when the market's in turmoil like it was today. You definitely want to be locking in your profits very quickly. You can't be screwing around thinking that you're going to be swing trading some huge swing for 100%. You know, this ripped 17% after I bought in at 89 cents. So that's, you know, that's a huge intraday gain just to make within the first hour or so. So when the market's in bear mode, like I was talking about last night, in the previous video, we need to be taking profits quickly, locking them in the morning. As you know, who knows what the frick is going to happen in the later half of this session. But the mornings are very, very predictable. There's going to be a lot of F1s that we can actually trade. So when the market's in bear mode, I typically only trade for the first 2 hours. Pretty much today, you know, I traded the first hour or two, and I was basically done for the day. I had what was the other stock? DVAX. It was one that I had today. I bought in at about 110, then 112. I was looking for the red to green move. We look at the daily chart here. After yesterday, you know, I was looking for another day of a squeeze here, but looking at the market, you know, we had the biggest decline today of 2013. So there wasn't too much buying action going on throughout the session. So when we see days like this, don't screw around with a lot of stuff. You're going to get, you know, hammered. You know, even some shorts, I just didn't even mess with it. I was short ZLC overnight from the 930s, made a nice little profit here. So I covered in the 880 area from our short alert yesterday at 928, 931. So made about another $500-600 on that trade as well. But going in tomorrow, I am all cash. I'm not trying to predict what the hell is going to happen tomorrow. I'll wake up in the morning, trade the first 2 hours. If there's some solid opportunities, maybe we'll make some money. Just like we did today on DRRX, but I'm not going to force anything. Wait for the perfect patterns, and definitely play it safe. You know, if you got losing positions, maybe you should just sell them, get rid of them. Don't let the market continue to collapse on you. Play it safe and play cash. But anyways, that's it for today's video lesson, and I'll see you guys bright and early in the morning.